what we have found in talking to people is that it's still way too early, that there's still a lot to be figured out, that it's still very difficult to transact.
Welcome to a brand new episode of the M&A Mastermind Podcast presented by Cornerstone International Alliance. I am your host, Nick Olsen. On this show, I get the opportunity to talk with the brightest minds in lower middle market M&A. Together, we discuss industry intelligence, deal management, shared successes, specialized expertise, and much more. If you serve the small to medium-sized business owner, this show will offer you tactics and insights you can use and implement now to become a master in M&A. Hello, everybody. Welcome to a brand new episode of the M&A Mastermind Podcast. My guest today is the founder and managing partner of Emmersion Capital, focused on building cross-border platforms between U.S., Europe, and Latin America. He has over 20 years of advising private equity, family offices, and middle market companies, recognized thought leader on U.S. and Latin American macroeconomics, with insights featured in Bloomberg, Merger Market, and Foreign Affairs. Frequent speaker at the Chicago Council on Global Affairs on political, economic, and investment trends across Latin America. Deep personal and professional ties to the region with experience living and working across Miami, Bogota, and Sao Paulo. Please welcome my guest today, Stephen Mark. Stephen, thank you so much for joining the show. Glad to have you. How you doing?
Doing great, Nick. Appreciate it. Thanks for having me on.
Awesome. Well, we got connected and talking a lot about just your exposure and experience in the Latin American markets. But before we dive into that, how did you get into all the work that you're doing in those areas, and why are you so passionate about it?
Well, it's interesting because it's a bit serendipitous. There's the personal experience, then the professional experience. Personally, I was in high school, grew up suburbs of Chicago, but family had a brilliant thought at the time. They wanted us to give back and really sort of experience other cultures, just the world in general. And what was interesting is that my parents linked me up with a group that was volunteering in northern Mexico. So this is pre-NAFTA. So this is before a lot of production, before wages increased at the northern border of Mexico. And so it was quite poor at the time. And I spent a couple of summers there, actually better part of 6 summers volunteering in northern Mexico during high school and college. And I kind of fell in love with the culture. I love the language. I love the people. I love the food. And to me, that was such a dynamic experience that I think to a certain extent, it ended up influencing a lot of what I've done in my career. And then professionally, come from the family office space, ultra high net worth family offices who owned assets, both domestically, US, but then also abroad. And when you're in that family office environment, you sort of get tasked with whatever your skill set is. And one of my skills is that I spoke Spanish. And so really at a very young age, starting to learn the dynamics of M&A, cross-border movement of capital, and how I could really carve out a niche in that space. And that's precisely what I did. So yeah, I think it was both on the personal angle, it interests me. And then professionally, I've always liked that risk of transacting abroad.
Mm-hmm. Tell us a little bit about your company, Emmersion Capital. What are you guys focused on? I know you're doing a lot of cross-border opportunities, but what is your thesis and what are opportunities you're looking for?
Well, let me sort of take a step back, kind of tell you the genesis of it and how we ended up forming our own holding capital group, but started Emmersion as an advisory firm. So this was 16 years ago, coming from the family office space, saw that we could actually fill gaps for a lot of these ultra high net worth family offices, U.S. private equity that was looking to acquire assets abroad. And look, some of them, the larger ones will have resources in other countries. The more middle market ones will not. And so what you need to do, as you know, is that you need to build the network. You need to pull in local resources, service providers that can help you with these transactions. And And that's what I did is essentially I formed large networks ranging from Mexico all the way to Chile, including Brazil, that allowed me to work with some of those US groups who were looking for either add-ons or platforms in the Latin American market. And so built that advisory business over the course of 8 or 9 years before we really started to see that there were capital opportunities ourselves that complemented the advisory business. So we had been doing a lot of transactions in the BPO space. We started to see that there was a need for technical services. So we formed a technical services platform that we then exported from Latin America into the US called Apertura. We started to see that there was a supply chain need, that US companies were pivoting their supply chain from Asia. So let's create a platform for US to LATAM supply chain called OneSource. So it started organically as we saw opportunities to bring our limited partners, our customers, clients into some of these businesses, and that's the genesis of it. So we formed Emmersion Capital about 7 years ago to then create a holding structure for some of these assets.
Mm-hmm. Cool. Appreciate that. And so with getting into the Latin American, markets and things like that, what are some macro shifts are you seeing driving maybe some surge in activity cross borders in South America that are really, drawing more attention to the area?
Well, I think the start of this happened because of the pandemic. There was a trend towards, I think it was supply chain disruption that started, I think, a larger push into the Latin American market, which took a long time to get there. But now the projections are somewhere between 70 to 80 billion dollars in manufacturing is going to move from Asia into LATAM over the next like 3 or 4 years from the World Bank. That trend started more private equity activity, more family office activity. I think macroeconomic shifts in general, whether it's the war in Ukraine, China, could be intellectual property, could be cost of labor, has also helped shift some capital movement into the region. And then on top of it, a war in the Middle East, all of a sudden, the Latin American market looks pretty insulated. And a lot of our family offices that we work with are saying the same thing. And so what they're doing is that they're diversifying some of their risk into the Latin American market, and knowing that it's going to be a very small capital allocation, but if the trends towards, let's call it a Western Hemisphere realignment, continue, they'll be in a good position to increase their allocations in the region. So I think it started with, for sure, it started with the pandemic, supply chain, but now it's become a little bit more broad.
Yeah. How are family offices thinking about the risk versus the return in the region? And, how has that evolved over the past couple of years?
I think a lot of them are looking at the global landscape and saying returns have become a little more flat in the United States, definitely flat in Europe, a lot more risk in the Asian market, higher valuations in the US, high multiples on some of these assets. It creates a but there's an advantage to acquiring some of these assets in Latin America because the competition is so low. So that valuations are more normalized. There's an arbitrage if you are producing in the Latin American market in Colombian pesos, Brazilian real, Mexican pesos, and exporting to the US, exporting to Europe, where they're dollar or euro derived contracts. But at the same time, the flip side to this is that there's always political risk, there's always inflation risk, there's always economic risk that exists in a lot of these countries. And frankly, not every family office is comfortable with that. A lot of them are still tied to the US or Canadian markets, more comfortable transacting in Europe. But those who are a little bit more aggressive see those arbitrage opportunities, see those valuation opportunities that exist in certain countries in Latin America.
What opportunities in the middle market, maybe specifically just industries or hot or cold industries or whatever, that our listeners might be interested to check out or look into as far as just Latin America and what's seeing some traction?
Well, let's start with the big one. Technology, I think, is the first. I think it's the top opportunity that really could create serious expansion and scale throughout the region. And part of that is just the fact that a lot of these countries are 10 to 15 years behind the United States in implementing technology. Now you layer in the fact that AI is here. And so this creates a huge opportunity for technology service providers, technology platforms, software, and those companies that are looking to create and then implement solutions more regionally. To me, that's one we talk about a lot. The second is production, and that goes back to supply chains moving from Asia into LATAM. I mean, through our platform, OneSource, on a weekly basis, we're getting everything from consumer products to business products, auto products, all the way down to large machinery, advanced manufacturing that companies, middle market producers or distributors in the US are seeking to either develop their own supply chain in Latin America or add some backups or redundancies within the Latin American market. So that's another one where I'd say there's a lot of activity. And then I'd say the third is really healthcare space. Yes, you're dealing with strong regulatory environments, but private healthcare has grown tremendously because of the emerging middle class in the Latin American market. That creates opportunities. Really following the trends of an emerging middle class in the Latin American market provides in itself a lot of opportunities. Finance credit is a big one. You look at private credit, maybe bubbles that are existing in the US or in Europe, those really don't exist in the Latin American market because there's just a lack of private credit. So a lot of our time is spent talking about what are those private credit opportunities, how do you underwrite them, and how do you make it safe from a currency perspective as well.
Do you have an example of a deal maybe you guys did or you've seen in a cross-border deal that is interesting and maybe it's U.S. capital successfully entering in South America? Anything that comes to mind that you've seen that would be an interesting case study to touch on?
Well, I'll go back to the idea of the more successful family offices, private equity groups that we work with are taking advantage of arbitrage. Great case study. Ultra high net worth Midwest family office who has been moving their supply chains from Asia into, they were already established in Mexico, but started looking at Northern South America, Colombia specifically, and then Brazil. And what they've done is auto parts and auto product manufacturing. It started off as redundancies. So it started off as greenfield investments of theirs, where we helped create a soft landing for them in Colombia to start manufacturing products to match their supply chain in China. But once the cost of labor started increasing in China, and we started seeing success within the Colombian manufacturing facility, that started creating expansion. And the way that worked was not only adding additional capacity for some of these products, but also looking at the region and developing regional hubs to not only service the US market, but then also looking at, okay, how do we then distribute into Ecuador, Peru, Brazil, and take advantage of some of the local trade agreements to make this very efficient from a tax perspective. So that's one example where we saw an arbitrage on production that the holding company in the US was able to take advantage of, but then also to a lesser extent, regional distribution opportunities that existed for the platform itself. Another example I'll give you: US private equity, middle market, engineers. So this is civil and commercial engineers. They started working with one of our platforms, Apertura, about a year ago because they cannot hire engineers in the US. So it's a highly competitive space. All these engineering companies using infrastructure money are trying to go after the same targets. It's hard to find engineers. And what we did is that we were able to create a customized solution and nearshore delivery centers in Colombia and Brazil to essentially export that design work, infrastructure design work, into the US, which once again creates an arbitrage because the cost of labor is lower, but then also fills that labor gap for the US private equity portfolio company. So those are two examples where you sort of look at the resources that exist in the Latin American market that could be used for US holding structures.
As buyers or other advisors out there looking into the Latin American market, what might be some misconceptions that US buyers or advisors still have about investing in Latin America?
All right, so I'll give you one example from your neck of the woods. So, and it's not specific to Wisconsin, but it's more broadly speaking in the Midwest. We see this a lot. We see a lot of preconceived notions of the Latin American market from 30 years ago. So we were working with a family office in Wisconsin who was looking at some expansion markets in Latin America, and we were talking to the founder of the family office who comes from paper mill money in northern Wisconsin, and we started talking about Brazil, and immediately he shut the possibility or the prospect of Brazil down. And I asked him, well, why is that? And he said, well, we got burned on a deal 30 years ago in the Brazilian market, and we'll never go back. And I ended up telling him, I said, look, I understand that. I understand the complexities of it. But 35 years ago, that country was still a military dictatorship. Like, a lot has happened since then to modernize that economy. I mean, if you look at even just the past 10 years in Brazil, you've seen tax reform, labor reform, tort reform. You've seen it's become easier to do for foreign companies to do business in the Brazilian market. So the whole dynamic has changed. I mean, I even asked my father. He ran large property casualty for Zurich, and he was trying to underwrite Ford in the Brazilian market. And 10 years ago, I was talking to him about it, and he's like, I don't know why any company would ever want to go there. But similarly, his perception was from the 1990s. Well, a lot of these markets have changed since then. And now, actually, over time, he understands that. He sees that there's more opportunity. Brazil, in particular, produces everything. So there's a manufacturing advantage. But yeah, getting past these historical biases is always a challenge for a business.
This episode of the M&A Mastermind Podcast is powered by Cornerstone International Alliance, where leading M&A firms come together. As part of this international network, you get access to global opportunities, over 200 M&A experts, enhanced collaboration and knowledge sharing, and some of the best M&A tools and resources available, all to help you take your firm to the next level. Ready to join this exclusive network? Visit cornerstoneia.com/new member today. You remember the bad things more than the good things, so your mind sticks to those. Your mind sticks to those.
You really do.
What about, you mentioned Brazil, you mentioned Colombia. What about Venezuela right now? We had talked offline about Venezuela and what's happening in that market, and talk a little bit about that.
Yeah, it was interesting because after Maduro was extricated from office in early January, there was, I would say, the first 2 months, a lot of optimism, a lot of questions that we were receiving from US private equity, family offices, European private equity. I'm just trying to understand what is happening. Hey, is there something that we can do to go in early? And look, I think what we have found in talking to people who are really active on the ground and have visited there is that it's still way too early, that there's still a lot to be figured out, that it's still very difficult to transact in Venezuela. While it's easier for US oil and gas, which has sort of preferential treatment and close ties to the US administration, but then also by proxy, the Venezuelan administration as well, it is still very difficult for, let's call it non-South American groups to be transacting there. However, on the flip side, what we have seen is that we have seen very risk adverse, forward thinking Colombian groups, predominantly family offices, who went in early. Some of them already had operating businesses in the Venezuelan market, so it allowed them to easily invest into the country again. They're expanding. They're increasing their portfolio in the Latin American market because they want to be ready. But this is still probably 3 to 5 years before I think we have, let's call it, any type of long-term certainty as to what is going to happen there. And I think it's too difficult for the average foreign group to do any business there.
Yeah, it's a good update, and obviously there's a lot of stuff going on outside of the M&A space in Venezuela right now, and I'm sure that doesn't necessarily help the situation. But what does the next 3 to 5 years look like there?
Well, I think what we need to see is we need to see a couple of elections, and what we need to see those. We need to see free elections that are, let's say, decisive, at least from the perspective of what direction, politically speaking, the country is going to go. If we see market friendly administration, I'd say in particular from the presidential administration in Venezuela, I think that will create interesting opportunities. I mean, even if you go back 15 years, Caracas was in some ways I would say the secondary business capital of Latin America. There were a lot of US companies that had their South American headquarters in Caracas. But almost all of them have pulled out since. And so what it's going to take is it's going to take certainty. And right now, I just don't see that. If there is some political certainty, then I think US investors, private equity, family offices, and asset managers are going to see that there's potentially a blue ocean opportunity. But we're a couple of election cycles away from seeing any of that. And that's what I fear, is that if you go in now, that you're just going to be far too early. But one thing that I have been recommending to people is establishing relationships, whether it is expat communities or those who are connected in service providers who are connected into into Venezuela. Start establishing those relationships now, because you never know when that opportunity might be, and you'd rather be early as opposed to being late.
What about, one thing we haven't touched on yet is Europe and Latin America. Now, you guys, you have a lot of interactions and from those two markets as well. And what is the strategic advantage of that model for you guys at Emmersion?
Well, what's interesting about those geographies is, so there was already a push by the European Union to diversify European middle market production out of Asia into South America. And then the EU Mercosur trade agreement was enacted. So it was signed in December. It was enacted in May of this year. And that to us is a game changer. We see already in the past month a lot of activity, in particular from the German market, some in the Netherlands, Belgium as well. Some Nordic countries have also expressed interest in exploring investment opportunities, whether it's through M&A, greenfield investment in the Mercosur countries. So the Mercosur countries, the biggest one Brazil, but that also includes Uruguay, Paraguay, Bolivia, and Argentina. So there's an interest in strengthening trade relationships between those European Union countries and the South American market. And that to us that's a really interesting prospect because it's similar to the US supply chain pivot from Asia into Latin America. If we're seeing that from Europe into South America, that creates all kinds of interesting possibilities from an M&A perspective and a capital placement perspective. And that's the dynamic that we're going to see play out over the next 5 years. This is something that long term is going to be pushed by medical technology companies, pharmaceutical companies, ag tech, healthcare. I mean, you name all of the big European industries, they are all going to be looking for some type of production in the Latin American market. And frankly, now this trade agreement makes it a lot cheaper to do that.
Yeah. Interesting. What would you like to share, with our audience, the M&A advisors out there, maybe the buyers, financial buyers, what are, 2 to 3 things? Let's talk about just, maybe M&A advisors representing buyers or sellers. What should they know about the Latin American market that are going to help, them better service their clients, really unfold maybe opportunities that you're not really considering or looking at right now to kind of maybe find unique opportunities for their clients?
Well, I'd say the first piece of advice that I would give to them is to be more open-minded. I think a lot of advisors, in particular in the US, they have blinders on. To them, it's we're only focused on the US market, or some cases the US and Canada. But we haven't really discussed the Latin American market with our clients and really helped educate them about it. And look, I know that's a tall ask if you're not used to, nor do you understand the dynamics of the Latin American market. But there are others out there who do. And, I think about not only our organization and reaching out to us, but other service providers. I think about Cornerstone as well, in your network within the Latin American market. There are relationships that can be created where you can pull in people who actually do understand the dynamics of that region. So I think being open-minded, number 2, educate yourself, even just to a certain extent. Jump on Bloomberg, read about Mexico, read about Colombia, read about Brazil, so that you can have that educated conversation with your clients. And then I'd say from an opportunity perspective, really be focusing on add-ons, because there are, as we were discussing before, there are not only arbitrage opportunities, but thinking through valuations that take advantage of a highly educated, highly skilled labor pool in the Latin American market. There are opportunities that could really benefit a platform, a US-based platform. So my suggestion to these advisors is to really be focusing on, okay, what is the core focus of my clients? What is their growth strategy? And then even just contemplating the possibilities of a smaller acquisition to pair with the US holdco. And look, we've seen it time and time again where US company, middle market company acquires that small operation or that small workforce in the Latin American market that ends up increasing their exit multiple because of the arbitrage or the valuation or whatever it might be. So those are really my recommendations. Just be open-minded, educate yourself, and then focus on the add-on opportunities and really talk to people. If you don't understand it, reach out to people who do.
Yeah, it's an advantage I think our firms have in Cornerstone International Alliance, is we have a couple of firms in the Brazilian market in particular that we've developed relationships with. We know them, and they're part of our group that now we can pick up the phone, call them, talk to them. Hey, educate us. What are opportunities there? Can we work on deals together? Do you have a client looking to buy or sell or whatever in the case may be. I think that network of just resources in different parts of the world, in particular, as we're talking about Latin America, to educate yourself and then get connected. Get connected with the right people and opportunities. That's a huge advantage for firms in our group. So I know they
Yeah,
appreciate that.
absolutely. And just a quick example. I mean, I about a month ago was introduced to Excelsia, one of your partnering firms in Brazil, and had a conversation with them. And look, just even in 30 minutes, bouncing ideas off of each other, because I have a perspective, they have a local perspective, and I feel like we both walk away from that conversation having learned something. And that's done very easily.
Yeah.
A heavy lift. You don't have to
Yeah.
fly to Sao Paulo to do that. Like
Right.
you could
Well,
have that virtually.
well, it's like what we're doing now. You're educating
Yeah.
me and our listeners on the opportunities there over a 30-minute span, and it's kind of basically the same thing
Yep.
that we're doing here today. One last question, Stephen. This has been great. I really appreciate your time. But just looking ahead the next 3 to 5 years, where do you see the opportunities maybe, that are emerging or on the forefront or on the horizon for the Latin American countries?
Well, I think it's two big topics that we discuss in the U.S. frequently. The first is succession. So you have a lot of concentrated industry sectors that are owned by family offices in the Latin American market. They have the same succession issues that we have in the United States. So what does that mean? And then I think that the second piece to this is AI and how that all maybe could fit together. I mean, what we're looking at now is really a combination, and I'm saying we as Emmersion Capital, is this combination of succession plus AI plus service-based businesses plus Latin America arbitrage into United States. And how does that all sort of fit together? Because that creates some really interesting possibilities if you have production in the Latin American market, a large workforce, which is what we have through Apertura, technical backgrounds who could be deployed into US companies virtually. It creates some very interesting possibilities. And that to us is probably focus number one. And I would say focus number two, which sort of goes along with the succession conversation, is retirees. And we see an opportunity of retirees and expats coming into the region. We think about their healthcare needs. We own a healthcare company, nurse case management company called Infirmera, that's already active in the United States and in Latin America, hires nurses to go into people's homes, keep them independently living longer. What does that mean if people are then retiring in Costa Rica and Panama and Mexico or Colombia? What type of services do they need? What type of bilingual support is out there? That to us is a really interesting focus area, and also one that the Latin American market is going to experience as well, because there is an aging population. So that to us, the next 3 to 5 years is I mean, it sounds like it's more about aging and AI and succession and all those
Yeah.
things.
Yeah, appreciate those insights. If our listeners want to learn more about the work that you're doing, if they want to connect with you and maybe learn more about the Latin American markets that you're working in, where can we send them? Where can they find you? How can they connect with you?
Best resource, go to Stephen Marks, STEPHENMARKS.me. It's my personal website, has all the information for our companies, our Emmersion Capital as well, some transactions we've worked on. And yes, happy to have any conversations, always open for just a brief call, just to give my perspective. As I said before, a lot of what I do is just educating.
Yeah. Stephen, thank you so much for joining the show. I hope you all appreciated and enjoyed the conversation we had today and learned a little bit about the Latin American market and gained some insights into those opportunities as you look at future deals with your clients. Definitely go back to this episode, check it out. Maybe you learn a couple of things more as you listen to it a couple of times. So appreciate y'all listening. Make sure to like, share, and comment on this episode. Pass it on to anybody who you think might benefit hear from our conversation today. And make sure to tune in every week. Every Thursday morning, you can find all our episodes at cornerstoneia.com. M&A-Mastermind.com/podcast. Thanks, everybody. Take care. Thank you for joining us on this episode of the M&A Mastermind Podcast, and a special thank you to our presenting sponsor, Cornerstone International Alliance. If you enjoyed today's discussion, don't forget to like, share, and comment. We'd love to hear your thoughts. Make sure you hit that subscribe button so you never miss an episode. We'll be back next week with more insights, strategies, and real-life experiences to help you take your M&A game to the next level.